Good evening, ladies and gentlemen. Thank you for joining us on another live stream. Today, we're going to be talking about everything finance and specifically targeting those investors who are outside South Africa who want to know what their options are for raising finance. I've got a guest speaker here with me tonight, Christian Janssen, someone who is very experienced not only in the property landscape but specifically in bond origination. Now, Christian, before we get into the questions, do you want to just quickly introduce yourself, your interest in property, and what services you provide to the market?
Hi, Lawrence. Thanks so much for having me. Good afternoon to everybody. I'm Christian Janssen. I'm a financing specialist and franchisee with At360 Finance. I have the mainland branch. So, personally, also a property investor, quite fond of buying properties. I'm a buy to let investor predominantly. And my whole business is focused on property investors, helping them to secure financing. It doesn't mean that I won't assist your normal end user searching for financing to purchase their own property. But yeah, I've always gravitated towards the investors.
How long have you been in bond origination, Chris?
Excuse me.
All right.
Change of seasons catching up with me. I've been in the origination game since starting off at Absa Home Loans in 2005. So it's been a proper innings. Haven't seen much change over the past 17 years, but yeah, it's
Well, that's good to know. I mean, if the process hasn't changed for 17 years, it's likely not going to change for the next 17 years. So hopefully this content piece will stand the test of time. Um,
hopefully so,
as
yeah.
this is a live stream, guys, please feel free to put questions in the chat. Christian will do his best effort to answer them. He's also been kind enough to give out his email address, so I will put that in the comment section below at the bottom of the video. So if you do want to contact him, you're welcome to do so. Chris, my first question for you is, as an international investor, be it someone who lives outside of South Africa and has no affiliation to South Africa, or a South African who has immigrated outside of South Africa, what options and terms can that investor expect from your commercial banks like the ABSAs and FNBs of the world?
Yeah, so from the bank's point of view, they look at your residency status as an important element towards establishing their own risk. So first and foremost, if you're a non-citizen based abroad, you are going to be subjected to exchange control regulations from the SA Reserve Bank, which means that your loans will be limited to 50% of the purchase price. The banks will always offer their loan on the lowest of purchase price or valuation, but that 50% rule will stand. So that it means it's quite a significant deposit that needs to be put down. If you're a non-citizen and you're residing in South Africa and you've got by means of a permit to be here, be it for work or retirement visas even, you can get a slightly higher loan to value offering, but it will primarily be limited to being in personal name. So as a South African based abroad, I've got quite a couple of clients who frequently purchase properties here, even though they are based abroad. And the whole plan behind it all literally just comes down to confirming and proving to the banks that they are able to service that bond installment. So it's much of a muchness. The whole assessment criteria remains the same, apart from a couple of additional hoops to jump through. And one of the main things is there will be a deposit levied in most instances. I've not seen a foreign based South African obtain a 100% bond in some time, not in the past year and a half for that matter. But similarly, so South Africans based abroad are able to acquire those properties in entities here. So if you make use of a trust or a company structure,
Mm-hmm.
you can still acquire those properties accordingly and get the financing. Where with non-citizens, the banks are basically forced to decline on account of it being a foreign exposed entity. So if you as a foreigner have a majority shareholding in that company, then the banks are not going to look at extending any financing to you in that entity, but in personal capacity potentially.
Okay, that's interesting. So if you've got five people in a deal and one is a foreigner and he's got majority stake, regardless of the credit score, any kind of any affordability of any of the other directors, no loan will be provided.
Unfortunately, not in an entity on account of it being a foreign exposed entity.
Interesting. Okay, so in summary, yes, international investors can get financing, but they will be limited to a 50% loan to value, at least for their first purchase. Their second, third, fourth, does it increase as they
Well,
purchase more?
if you're a non-citizen, you'll always be limited to the 50%. I can use one of my clients as a good example, being based abroad. He's also a non-citizen, but what he does is he finds properties fairly distressed, buys them cash. After receipt of the title deed, he bonds them to 50% of the value. So he at least is able to recoup
Because
a
he's
little
buying
bit
at
of
a
his own capital.
discount, yeah, he's actually getting a better loan to value than 50%. Okay.
Effectively, but that's unfortunately as far as it'll go for non-citizens. But for a citizen abroad, some of the banks still only offer a 50% bond because they're quite conservative. But ABSA and Standard Bank at this point in time are offering up to 90% for South Africans based abroad.
South Africans based abroad. And then
Yeah.
registering a company or trust actually worsens your chances for getting finance because then it's seen as a foreign entity.
Not if you're a local, a citizen.
Okay.
So let's say you relocate to Belgium and you base yourself there, but you've got a local company here, you'll still be eligible for financing in that entity because you are a South African. So that's the whole principle.
Okay,
It's
so
just
so
it's
South
focused on the
African,
citizens.
yeah, so a South African who's got a South African registered company who moves and starts to live and work in China and has no intention of coming back can still get South African rates or local rates because
Yeah.
of that nationality versus someone who's, let's say, a Zimbabwean who's now relocated to South Africa, they'll always be a foreign status in terms of the bank's perception.
Well, if they've got a valid working permit, they may be looked at more favorably, but also only in personal name. So to apply for financing in an entity will not work.
Okay, so in terms of international investors, there's a restriction on the deposit or on the loan to value.
Yeah.
What about interest rates? Do they tend to get worse interest rates?
Not really. Remember, a lot of the risk gets offset by the fact that half of the property's price is being covered in cash.
Hmm.
So the interest rate offerings are fairly comparable, occasionally a lot better, but also depends on the track record that they've built up.
And do they use the same the stuff that we get asked for when we apply for finance, which is your affordability and your credit score? Are those the same things that are looked at for internationals?
Exactly that, yes. So for an international person who has no credit history in South Africa, obviously that will slightly muddy the waters, but similarly, so a lot of that risk gets offset by the fact that they are putting down a
Yeah.
50% deposit.
If there is no credit score in South Africa, can they use the credit score they've got in their own country, or that doesn't really?
No.
No.
Even though, like, if you look at Experian, they're an international company, but you'll have credit scores based on Experian's models in many a country abroad. The locals do not look at it at all. It doesn't carry over, unfortunately.
Okay, I think we've touched nicely on the commercial banks, the ABSAs, the FNBs, the net banks, the big banks. What about some of the more commercial brokers, the boutique banks? Are they a bit more lenient towards international investors?
The principle remains, and it's governed by the South African Reserve Bank. So it comes down to your exchange control regulations that limit you to a 50% loan. So unfortunately not. Some of the boutique lenders will, however, consider funding in an entity where the main commercial banks are very, very strict on that.
And what have you found to be the biggest challenge with your clients that are international investors? What are their biggest challenges with finance?
No, it's much of a muchness. A lot of it is exactly the same. As I said, the deposit requirement may change things a little bit by means of basically being guaranteed you're going to have to put down at least 10% of the purchase price and then cover your acquisition costs. But the rest of it, if your paperwork is in order, there's no problems. So for a local or for a South African citizen based abroad, part of what we also need to just provide is we need to confirm the validity of their employment and stay. So you will have to provide, if you've got a foreign passport, then that passport copy will suffice as showing your rights, your visa, your permit access to be there. If you don't, they'll want to see a copy of your South African passport as well as a copy of your visa confirming with your validity of your employment and also your employment contract together with payslips and bank statements and the usual.
In terms of setting up a company, which I think is the preferred structure for property investing and for scaling, because as you build your personal income, you obviously are subject to higher taxes. So would you recommend then if an international wants to get exposure through a company entity that they partner with a local?
That can definitely work. You'll still find your limitations on your loan to value though. So that is something to consider. I've had a couple of other creative solutions where a foreigner based in South Africa, he registered a company with a local guy, and the local guy is the sole director and majority shareholder. In that specific instance, what we managed to secure a couple of 100% bonds. And from this client of mine's perspective, all he's doing is he's helping to get the properties together. He's putting in capital to fix it up, to get it into proper lettable stock. So there are options around it, but just remember your recourse is going to be fairly limited. If you're a minority shareholder and you're not a director, it can cause a couple of problems down the line. So you have to be 110% certain of the person that you partner with.
Okay, interesting, because a lot of my portfolio is built on private finance, and funny enough, a lot of my partners are ex-South Africans living abroad in Saudi and China, where they've got stronger earning capacity and they've got some
Yeah.
savings. But I don't want to get restricted. I want to use my affordability and my ability to raise finance instead of leveraging them. So do I need to then have majority shares? Do I need to be the sole director? How do I structure the company so that I have the best chance of success for finance?
Yeah, so on paper, you'll be the only one applying. It's actually as simple as that. So you're the director, you're the main shareholder, and you sort out the shareholding a little bit later down the line
Okay.
with your benefactor or partner for that matter.
Okay. Have you heard of the concept of A shares and B shares, like control shares and profit sharing shares? Does that have any impact to
Yeah,
this?
it does factor into it. Just remember your ordinary shareholding is your ultimate beneficial ownership. And that's one
Mm.
of the most important things that the banks will always consider. Because from a FICA point of view, they need to establish who the ultimate beneficial owners are. And that's what I find with especially investors who have quite a convoluted structure and a massive spider's web, where we'll be starting with a little company over here. That company might have a holding company with another holding company and then a trust. For FICA purposes, we need to show all of that because in the end, it stops at an individual because the banks are quite wary of borrowing any money to what you can basically refer to as a man of straw. So there's
Mm.
always going to be an individual that has to stand at the back of it. But yeah, with your A class and your B class shares, with your memorandum of incorporation, you can put a couple of safeguards in place. So, and this is now from a funder partner point of view, to make sure that the other person doesn't just do whatever they want and put your investment at risk.
Mm. Okay. It's just interesting, hey? This is the kind of stuff that we don't get taught at school, and I think there's a lot of people outside of South Africa who are desperate to get our returns and our yields, but have no idea what is possible. Um, are there any closing thoughts or final tips and advice that you would give to people outside of South Africa looking to raise finance?
So first and foremost, get yourself pre-qualified. If you're locally based, reach out to me, or not locally based, local of origin. Let's rephrase.
Yeah.
So, then you'll likely have a credit score. Occasionally you won't, and that will unfortunately count against you. So let's figure that out first and foremost. Run through a credit check and see where you are from an earnings point of view. if you don't have a credit score, I had one case like that a couple of months ago where she ended up taking out a credit card. It was offered on the banking app, so she didn't even need to collect the card for that. And she just put on a couple of subscriptions, paid some money out of it into another account, and then repaid it later on to just show credit activity that is safe and secure from a banking point of view. And that helped us to secure a bond.
Guys, you heard it here first. The main step that you can take is to go and reach out to a bond originator. I recommend Christian, and I will have his email address in the comment section below. Please don't waste his time. Only do this if you are a serious investor looking to invest. I don't want to be sending him a whole lot of spam, but speak to him, see what you are pre-qualified for. If you've got a credit score and a good affordability, he can give you an estimate of what kind of resources you could target. The reality is that as a non-South African resident, your restriction is going to be a 50% loan. As a South African of origin, you've got a few more options. I hope that you found this useful. If there are any more questions or comments that you want to leave, put it in the comment section below, and Christian and myself will definitely answer you. Christian, thank you for your time tonight. It's been a pleasure, sir.
Great to be on here. Thanks, Lawrence.